All right, I think it's about that time. We're going to go ahead and officially get started here. Hey, everybody, I'm Jake Alexander from Action Accounting. I'm joined today with my good friend, Ty Crandall from Credit Suite. Ty, how are you doing this afternoon?
I am exceptional, man. Tomorrow's Friday. Like we're almost to the weekend.
There we go. That's awesome. Well, thank you so much for being here. Ty and I are both very excited. We are both humbled and honored that you guys would take some time out of your day and spend it with us today talking about stuff that we consider very interesting. We want you to know that we take your time very seriously. And so our promise to you today is to bring as much value as possible. We do these events once a month for our current clients at Action Accounting. And typically it's, me talking about some tax subject or something like that to our tax planning clients, or every once in a while, a subject that I'm already pretty knowledgeable on. Today, I'm very excited. I've got a huge list of questions for you, Ty, and I'm sure the audience does too. So we're really excited to jump into this thing. What we always like to do is start off with a little bit of an agenda here just to kind of keep us organized. So everybody knows what to expect. First, we'll spend just a few minutes doing housekeeping. I always like to outline kind of the structure in the format for today's event so everybody knows how to get the most value out of it. We do introductions, just a little bit about me and Ty, your amazing hosts for today's event. This event's not about us, but I always think it's nice that we're not just two perfect strangers up here talking to you guys. So quick introductions on us. The majority of what we're going to spend most of our time talking about, the meat of the conversation today, is going to be business credit. So Ty's got an amazing presentation that he's put together for you guys. We're going to talk about what business credit is, how to get it, and most importantly, why you need it. And then last, but certainly not least, we always build a lot of time in the end of these for Q&A. So save your questions to the end. We're going to make sure we get all of those answered. I've actually got a big list of questions myself that I want to ask you, Ty. So if we don't have a ton of them coming from the audience, I might be a little self-serving and get some of my questions answered there too. And so diving right in, just a little bit of housekeeping. You've probably already noticed this is the webinar version of Zoom. This isn't the typical version where everybody's face pops up and everybody can chime in and say something. We do that for a reason. If anyone's ever been on a Zoom webinar with more than a dozen people and 3 or 4 people start talking at the same time, they quickly go off the rails, and we don't want that to happen. So we do these in the webinar version. What that means is we still want to interact with you and we still want to hear from you. There's actually a Q&A box down in the bottom. There's a chat box just like in regular Zoom, but on this version, there's also a Q&A box. And so what I'd love for you guys to do, just so we know that you know where it is, you know how it works, and you know how to interact with us, everyone go down there and type in your first name and the city that you're from, just so we know that everybody knows how to use that. And most importantly, so that's where you can put your questions in. And some of those we will answer live on the spot, depending on what it is, but all of them we will get to at the end for sure. And so do me a favor, go in there and just type in your first name and where you're from. That would be amazing. And that's really it. So all your questions, we designed this to be a really interactive environment. So the more questions you guys have, the better. A majority of those, like I said, we'll wait to the end to make sure we get all of those answered, but some of them we will get those answered depending on the topic and kind of where we are in the conversation. So Felicia from Alpharetta, great. Thanks for joining us. We know that you guys know how to use that too. So I see a couple other people that are here local. We're always happy to have you guys on there too. So Adam from Tampa Bay, Bay. Good to see you, Adam. There we go. So that's really it on housekeeping and how that works. We wanted to make sure everybody knows that. We got Charles from Las Vegas. Charles, always a pleasure. Thanks for joining us. Let's jump into introductions. So a lot of you may know me already, but just to make sure, Jake Alexander from Action Accounting. We specialize in tax planning for business owners. In our company, we have 4 main departments. We have bookkeeping, tax prep, tax planning, and business services. Bookkeeping, most of you know, I mean, this is really where we're just creating financials for business owners, most importantly, teaching them how to read them so they can really understand how much money's coming in and going out of their business. Tax preparation, the folks in that department right around this time of year get really popular because those business extension deadlines and individual extension deadlines are coming up. So we make sure we have a timely and compliant tax return filed for you there. Tax planning, you know, they say you're not supposed to have a favorite or we're not supposed to play favorites, but personally, this is my favorite. This is where we get to do a lot of in-depth proactive strategies with our clients, which we love doing. We save them a ton of money on taxes there. And then in business services, a lot of people don't know, we can help you create LLCs, dissolve LLCs, set things up, convert from C Corp to S Corp, all kinds of interesting structure stuff there. We have an entire department just dedicated to doing that. If you need help with any of that stuff, we would absolutely love to be of assistance. You can always go to our website, which is www.actionaccountingusa.com, schedule an appointment, or you can always find us here on all the major social media channels as well. And so that's a little bit about me. Now I want to introduce you guys to Ty. Ty Crandall is an internationally known speaker, author, and business credit and financing expert. He's a CEO at Credit Suite, and he oversees the biggest business credit coaching operation in the United States. He's got 16 years of financial experience, widely recognized as an authority in business credit building, business financing. He's also the author of 2 popular books, Perfect Credit and Business Credit Decoded. He's a frequent contributor to radio and news shows, TV programs, magazines, stuff like Entrepreneur, Inc., Forbes. You're also the host of your own podcast, which is the Business Credit and Finance Show. Ty Crandall, how are you doing today?
Exceptional, my friend. How are you?
I'm amazing. Thank you so
I'm even
much.
better knowing Adam Taylor's here. Like if I would have known that, then I would have wore something nicer.
You would have really stepped it up, right?
Absolutely. Yes.
Nice. Well, we only bring out the best when we know the big guns are coming. And so thank you so much for being here. We really appreciate it. At this point, I'm going to turn it over to you. I'm going to let you get started with your presentation here. So if you want to get that brought up, this will be all yours, my friend.
All right, sounds good. Thanks, Jake. I appreciate it. I am going to. It's going to stop your screen sharing. I'm going to tell it. I'm going to say I don't care. Give it to me. Give me the sharing rights. Hey, everybody. Ty Crandall here with Credit Suite, and again, appreciate the kind introduction from Jake. Jake and I are friends that go back years and have a tremendous amount of fun together. So I'm really honored by the opportunity to be able to be here to be shared. So what I would like to do today is I just want to dive in a little bit, talk about the art of business credit. I want to give you an overview of what business credit is, how it works, the exact steps to obtain it, and then we can open it up to a Q&A. I know Jake has some questions, and you might have some questions that I haven't addressed here as well. We'll get those answered. And my goal is for you to leave here today and go, wow, like I now have a good understanding of business credit. I know what it is. I know how to get it. And if you reach that level, interesting statistics from entrepreneur, about 90% of entrepreneurs know nothing about business credit. So you immediately become one of the 10% that do. Here's the other interesting thing is those that are familiar with business credit and your business credit scores are 47% more likely to get approved for financing. So just by going through this today, you're going to come out on the other side as one of the elite group of people that understand this concept and also have a significantly better chance of using what we're going to talk about to be able to get credit financing to grow your business. So we got a lot to cover. Let's dive in. So first of all, when we talk about business credit, we're ultimately talking about credit that is linked to your EIN. It is, if you're familiar with your consumer credit, which you obviously are, then you're building a consumer credit profile, and that's linked to your social security number. Well, business credit is a credit profile that's for your business, and it's linked to your business's EIN, and it reflects your business's risk of being able to obtain financing and credit, for example, versus your consumer credit that looks at your individual risk of obtaining credit financing. So this basically helps separate these two, right? We've got consumer credit, which is used to qualify you for mortgages, car loans, and credit card issuers, and credit issuers and or credit cards. Credit issuers and lenders are looking at that to make those kind of decisions. Then we have your commercial credit profile and score, and Inc., Entrepreneur, Score. They all say the same thing. You want to separate these because when you separate them, you can separate your liability, not be personally liable for what's happening in your business. You could build this credit profile that lets your business stand on its own and literally fund itself because it can use its own credit profile to qualify for credit financing. So a lot of benefits in doing so. Then this commercial credit profile is then used to qualify you for business loans, business lines of credit, and business credit cards, and all the type of credit and financing that you would want to be able to obtain for your business. So ultimately, what business credit really does is it just helps your business fund itself. And what I mean by that is that you're probably used to being a signer, guarantees, signing personal guarantees, being personally liable for your business debts. Business credit is really the step to get away from those guarantees. It starts right away where we start getting vendor credit without personal liability, without personal guarantees. We start getting credit at stores. We start getting Visa card, MasterCard, auto financing, all without these personal guarantees, then the more you build that business credit profile and score, the more types of financing become available, loans and credit lines even down the road as well, without this personal liability. So again, your business is funding itself based on the quality of its credit profile that I'm going to show you how to build. It's not reliant on other things like your personal credit to be able to get approved. So why would you do this? Well, first of all, business credit is ultimately directly responsible for whether you get approved or denied financing. Now, the problem is that there's no Fair Credit Reporting Act in the business world. So lenders and credit issuers don't have to, by law, notify you that they made a denial decision based on business credit quality, like they are required to do with personal credit. So a lot of times what happens as entrepreneurs is we're applying for credit cards, loans, and credit lines. We get denied. We don't really know why. And rarely do we even know that it's because of our business credit quality. Now, I have a stack of denials from people that came to us because of those denials to fix the problem that did say that the issue is business credit. But in a lot of cases, you're not even told that that's the reason for denial. But business credit's as important to your business getting money as personal credit is to you individually. So if you're getting denied for credit financing, in large part, it can be tied to not having any business credit or having bad business credit. Oftentimes, those two are the same thing. Literally, Experian and Equifax will give you failing business credit scores because you have no credit. So the key here is to build a healthy business credit profile and score so you get more approvals and not as many denials. The other thing that business credit helps determine is the rates and the approval amounts that you'll get. So if you've ever gotten financing and not been happy with how much you got approved for, or you felt like you paid a way higher interest rate than you should pay, or you're just getting solicited for these cash advances or revenue lending where the terms are short, 12 months or 24 months, and the interest is very high and your payments are very high, well, that in large part is happening because you don't have business credit established to be able to get you the better kind of financing. So business credit or a lack of business credit will oftentimes not get you the amount that you want to get or the terms that you want to get, but by establishing business credit, this is what gets you lower interest rates and higher approval amounts. Business credit also is the key to getting you really high limit accounts. But one of the biggest problems the mistakes we face as entrepreneurs that we make is that we use personal credit to fund our business. We oftentimes launch a business. We underestimate the time it takes to make revenue. We underestimate the amount of money that it takes to launch projects, the company itself, everything through. I've been doing this for decades. I still double the time estimate of whatever I'm thinking it's going to take, and I double the cost of whatever I think something will take because I'm so used to grossly underestimating those two things. I don't know if you can relate to that. Well, consumer credit, what happens is when we use it to fund a business, a lot of bad things happen to us. First of all, we max out that credit pretty quickly because consumer credit was never designed to fund a business. Now, we call this personal financial checkmate because once you max out those credit cards, you really damage your consumer credit scores because 30% of your FICO score on the consumer side is your utilization, what percentage of those credit cards you're using. So if you're trying to use them for a purpose they're not intended to fund a business and you max them out, you really damage your scores. Then it inhibits your ability to go out and get loans and credit lines and the kind of financing that you want to get. Now, business credit's the exact opposite. Per SBA, the limits on a business credit card is about 10 to 100 times higher than consumer credit. So let me give you an example. We could take a startup business that has never built business credit, start them today, and a month from now, 30 days, they're getting $10,000 limit accounts. Within about 90 days, they're up to about $20,000 to $30,000 limit accounts. And within 6 months or less, somebody is usually getting about $30,000 to $50,000 individual limit credit cards. So imagine getting $30K at Apple and $50K at Best Buy and $20K at or at Staples and another $30K at Costco. That's what business credit does. It gets you these very high limit accounts that, again, allow you access to the capital you need to grow your business. Plus, you're able to get this without a personal credit check. As a matter of fact, they're not pulling your personal credit at all because it's based on your business credit quality. So we're building a credit profile that helps the business fund itself, so they don't need to look at our consumer credit. helps us in a couple different ways. Maybe you have some dings on your personal credit. It's common. We're entrepreneurs. We're risk takers by default. Well, this overlooks that. We don't care about damaged personal credit. Even if your personal credit's exceptional, we want to minimize the amount of inquiries on your personal credit report because that, again, inhibits your ability to get a lot of business financing. Lenders don't like to lend to you when they see that you're applying for credit with other major lenders. So we want to limit the amount of inquiries on our personal credit as much as we can. And business credit allows lenders and credit issuers on the business side to look at that, not consumer credit, which helps us keep those inquiries off our consumer credit reports and scores. As I've already mentioned, no personal guarantee. So we're getting all this money, these $20,000 to $50,000 limit accounts, without being liable for that debt because it's in the business name. The business is liable, we are not. So we're able to get around these personal guarantees, the only legal way to really be able to do it. Plus, it's your reputation. Unlike consumer credit, where I need your permission to pull your consumer credit report, anybody can pull your business credit report. Okay, so anybody, if I can go right now, and if you go to Dun & Bradstreet, even yourself right now, the very first question D&B is going to ask you is, do you want to pull a credit profile for your business or somebody else's? So your business credit reports are publicly accessible. So oftentimes, if you're looking to raise money, you're looking to exit your business, you're looking to bring in a partner, your clients, your competitors, any of these people can actually look at your business credit quality and make the decision on whether or not to buy your company. So Marcus Lemonis has a great reality TV show on where he comes in and rescues businesses. And I've seen him more than once pass on a business because they said things he wasn't sure about. He went and pulled the business credit report and made the decision not to invest in the business. This happens all the time behind the scenes. So you want to control your business credit reports and scores because it ultimately is your public reputation. So now that we kind of understand what it is and the benefits it provides, then how does it work? Well, the very first step that we want to do is called fundability. And the reason fundability is important is fundability is like the secret criteria that lenders and credit issuers have, but they don't want to tell us about. They don't want to tell us because if they told us what they were looking for, we would go either do that or fraudulate or fake that in some cases. That's what they're worried about. So they don't want to reveal this secret formula. Now, we've spent decades figuring this out, working with lenders, working with credit issuers, working with credit reporting agencies. Some you know, a lot you probably don't even know about, the ones that lenders use behind the scenes to figure out what is it that these lenders' computers are really looking for? What are they making these approval decisions based on? And surprisingly, it's not what you think. More than half of all applications for credit and financing are denied, not because of your revenue, not because of your credit score, not because of your time in business. They're denied because of what are known as fundability items. And there's over 120 fundability items, too many to be able to cover here, but we want to look at some of these items that tie into what we call a fundability foundation. And we want to think of fundability like this. Fundability is our way to look credible for what I call optimal capital. So what's optimal capital? Look, I can go out today if I have 6 months worth of revenue and get a loan with the 30% interest rate and 4 months to pay it back. That's not optimal. I want SBA loans. I want 30 years to pay it back. I want to be able to get $500,000 whenever I want to. I want to be able to get low interest rates. So when I talk about optimal capital, I'm talking about getting the most money at the best terms for your business. So if we want to get the most money at the best terms, let's be honest, we all do, then you've got to look credible to the lenders and credit issuers. You've got to meet this fundability requirements that they have. And that really is what fundability is these 120 aspects that we found that lenders and credit issuers truly look at. So let's just take a look at some of the basic foundational things. You want to set up an entity, preferably an LLC or a corporation. And you want to have an EIN for your business. Yes, you can have a business and be a sole proprietorship without an EIN, but you don't want to be a sole prop and you don't want to have not have an EIN. You want to make sure you have an EIN and that you have the proper entity set up, preferably an LLC or corporation. You want to avoid what are called high-risk NIACS code. So here's what's interesting. I often stand on stages in front of, ultimately 8 and 9 figure businesses. And when I stand in front of these businesses, I say, how many of you know your NIACS code? And any audience I stand in front of, less than 2% do. So here's why this is important. NIACS code is an industry, a national industry classification code that was basically created by the government. It's used by the SEC. It's used by the IRS to determine tax audits. It's used by lenders and credit issuers and insurance companies. A lot of authorities out there are using your industry designator to determine the real industry that you are in. And then what happens is a lot of things. So the IRS actually triggers audits. I'm not an accountant, not an accountant. This isn't accounting advice, but an IRS will trigger an audit because they see a company that's a trucking company with a trucking NIAX, and they see that their expenses are out of sorts. They're out of they're not necessarily normal to other companies in that same industry. But here's the problem. If this wasn't really a trucking company, if they did something else, but they chose the wrong NIAX code, like most of us do, then this triggers IRS audits because our expenses are being looked at and compared to other people that aren't even really in the same industry. Same thing happens with lenders and credit issuers. They have restricted industries. They have prohibited industries. So if they see that we're in one of these industries, well, then it's a problem. So I'll give you an example. I just finished a webinar 20 minutes ago, and somebody said, hey, Ty, I'm trying to get money for my CBD health business, and I can't get a bank to approve me for a bank account. I said, yeah, because you said CBD. You don't want to go with marijuana to a bank because that's going to get you denied. But you are a health and wellness company. So find a NIAX that reflects that your health and wellness. And when you go in, tell them that is your industry, given that NIAX, tell them your health and wellness, all of which is 100% on board, ethical, and legal, and you'll get approved with no problem. This is the importance of NIAX codes. See, the business owner doesn't understand that she's trying to push forward with a high-risk industry, but she could easily choose health and wellness designator, which she is, and avoid all the problems of being in the high-risk industry. The same thing with insurance and paying more on insurance you could. So we need to understand what our NIAX code is. Now it's easy. We can go to NAICS.com. We can search for our industry. We'll find what we think that it basically is, the best description. Then we want to, whenever anybody asks our industry, we want to say that exact NIAX code, and then we want to say the exact definition. So we might want to say, hey, I'm a software publisher, and my NIAX is 345219. So that's exactly what it should look like on any application. We don't ever want to be confused the business reporting agencies. We don't want to confuse lenders or credit issuers with the wrong actual industry. We want to know what our NIAX code definition is, and we want to know what the actual number is, and this will always help us be looked at in the industry that we're in. Even the credit reporting agencies have comparison scores where they compare you against others in your industry. All heck breaks loose if you are seen as being an industry or not, and it oftentimes happens. Let me just give you a little bit deeper. If you look at real estate, for example, there's over 30 subcategories of real estate. So if you walked in and said that you're in real estate, well, then the lender, the credit issuer, the bank, nobody knows which of those 30 you're truly in. And the same thing with transportation. There's over 30 sub-designators of transportation. So there's all these sub-designators within an industry we think we're in. This is why we need to know exactly where we are in, so our risk is gauged appropriately. Okay, the next thing, we want to have a separate phone number for the business. We want to have a separate address for the business. We don't want to use PO boxes. We don't want to use home phones. We don't want to use mobile phones or even home addresses either. We want to have a professional website that reflects what we do. And we want to have a professional email address. We do not want to use like what Jake has, partydude2024 at Gmail. We want to avoid the Gmail. We want to avoid the AOL type email addresses. We just want to make sure that preferably we have like info@ourdomain.com. It's the best kind of email address. We want to have a separate license for our business. In Florida, I can get one right in my county. It costs me less than $100, and I can go get they call it like a tax. They just changed the name of it. It used to be an occupational license. Now it's like some kind of tax ID is what they identify it as in Hillsborough County. Adam Taylor would know. He's here. He can type it in the chat. So that being said, I can get a license. And a license, there are places like Granger that will give you a credit line of $2,500 to start your business credit. And they'll give it to you just because you have a business license. They really look at this as such a positive sign of a business being legitimate. They go ahead and get the business license if you can get one in your county, in your state, or for your industry. Also have a separate bank account set up for your business as well. Get a DUNS number from Dun & Bradstreet. It's 100% free. You can even go to creditsuite.com/DUNS. And we have a short link for you to get the DUNS number right there. And most importantly, all of your information needs to be congruent. It all needs to look the same. It needs to be exactly the same, or otherwise lenders think it's fraud if your business application doesn't match the other information they find online. Now, the next thing we want to do is once we make sure we're set up where we're credible and fundable, then we want to start getting initial credit. And there's ultimately 2 ways to do it. Now, as I mentioned, you will be given failing credit scores from the reporting agencies even when you have no credit. So it makes sense to get a copy of your business credit report just to see what's on it. You can go to creditsuite.com/monitoring to go ahead and get a copy of some of your reports right now and to be able to see what's on there. Now, next, keep in mind that over 90% of business credit does not report to a business credit reporting agency. So a lot of people think they have business credit, but they don't, because the credit issuers who are giving them credit are not reporting the credit to the business credit reporting agency. So you need to be intentional about building business credit. You need to be monitoring your business credit to see what's on there. And there's 2 ways to get started initially with a business credit profile and score. The first is called credit line hybrid. These are credit lines you can get 50 to 150,000. You can get them as a brand new startup business. They're no doc. They don't require any income verification documents. You can get approved with 0% rates for about 18 months. You could take the cash out at 0%. Our real estate investing clients love this. They take the cash out. They use it to buy properties, for example. This credit reports to the business credit reporting agencies. It does require good personal credit to get approved. You need a 680 or 700 type FICO to get approved. And if you don't have that, it's okay. You can use the credit of a guarantor, a family member, a friend, for example, a business colleague, a potential investor. If somebody else has good credit, you can use their credit to get approved, and these accounts still will report on your business credit reports. About half of the clients we help with this program have credit issues. They're just using a signer, a guarantor to sign in their place. So again, really good way to build business credit because these credit lines report to the business credit reporting agencies, and you're getting like 50 to 150K, even as a startup right out the gate, of access to capital that you can use to grow your business. And if you want to learn more, you want to apply and get approved, you can go to creditsuite.com/CLH, short for credit line hybrid, to do so. Now, the next option does not require good personal credit. And these are what are called starter vendors. So starter vendors ultimately are vendors that will give you credit even when you have none, and they report the credit to the business credit reporting agencies. So some examples here are Uline, one of my favorite of all time, starter vendors. They'll give you credit to be able to buy their stuff like shipping supplies, amongst other things they sell. Granger sells all kinds of outdoor supplies. They'll give you a $2,500 credit line if you just have a business license. So there's all kinds of these starter vendors, even ones that will give you credit to be able to buy websites, to be able to run ads on Facebook and Google, amongst office supplies, swag, all these kind of things that you probably are going to buy anyways, but you can just use this kind of vendor credit to do it. These do not require a personal guarantee, so you're not liable. You're starting business credit right away with no guarantee and liability, and then you are seeing these accounts report to the business credit reporting agencies in 30 days or less. Doesn't matter to me which path you choose. If you use credit line hybrid, you get real cash real quick, but it requires personal guarantee and good credit. And the starter vendors don't require personal guarantees or good credit. And you're able to start with these starter vendors as long as you're getting credit with them, buying stuff you need, paying the bill on time early. That's going to give you your initial good business credit report score. Now, as we talked about, you also want to monitor your business credit reports. You can go right here to access Experian and Equifax credit reports. NAV will also be adding back Dun & Bradstreet credit reports more than likely by the beginning part of the year. So this is one of the best places to go right here to get access to NAV, where you can actually build your business credit. You can even get an account on your business credit reports just because you buy one of their pro services, which allows the reporting of the payments that you're paying them for credit monitoring. So pretty cool. So we want to monitor this to now make sure that these accounts are showing on our business credit reports. The next thing that we want to do is we then want to continue building. And as we continue building, we basically want to find the credit that we want to get. We want to apply and get approved. We want to use the credit and pay your bill on time. And then we want to monitor your reports. Now, let's take a look at what are the other types of credit that are available out there. Well, there's a lot of different types of credit that you can get. There's retail credit. This is credit at every major retailer you can think about. Let's just look at what's on my desk right now. I've got my Amazon Basics speakers. Amazon has credit lines. I have my HP monitors here. HP has credit lines. I've got my Apple iPhone, Apple has credit lines as well. I bought some of these lights here at Staples. Some of them are at Best Buy. Staples and Best Buy both sell them. I've got my printer back there, my postage there. My postage comes from UPS. UPS gave me a business credit line. Okay, furniture from IKEA. IKEA has credit lines. So the idea here is that almost every major retailer offers corporate credit without a personal guarantee and credit check. Tractor Supply, John Deere. I'm from Indiana. I got to give John Deere a shout out being from Indiana. We've got Staples, Office Depot, Costco, Sam's Club, Lowe's, Home Depot, Labor Ready, UHD Supply. You get the idea. I mean, there's even Nordstrom and Macy's, Sears, JCPenney. I mean, you walk through the mall and a lot of those retailers offer corporate credit without a personal guarantee and credit check. That's retail credit. Fleet credit are fuel stations, repair of vehicles, maintenance of vehicles. Doesn't matter to me. Okay, I have a home-based office. I don't running around a lot. I live in the middle of downtown. But I will tell you this, that my transportation clients that are in the transportation industry spend $1,000 to fix, to be able to fuel an 18-wheeler, right? So that makes a really big deal. So fleet credit is fuel of vehicles, repair of vehicles, maintenance of vehicles. Then we're able to get what's called universal credit, Visa cards and MasterCards and American Express cards. We're even able to get auto financing without a personal guarantee and credit checks. One of our clients the other day got $350,000 in financing at Ford with no personal guarantee and no personal credit check. Now, we're also in the business of helping people offer business credit financing as a service. That client got the finance manager as his client, teaching him how to do what he did to get $350,000 in approval. He went in to get a car. He walked out and started a Turo business. True story. So he walked in to get a car, got $350,000. The finance manager was like, I've never seen this before. And he's like, yeah, I offer business credit financing as a service. If you want to become a client, he's like, yeah, gets the finance manager as a client, makes a couple K in profit, and then gets so much in financing, goes home, thinks about it, and launches a Turo business. So it just goes to show you what's possible as you continue to build business credit. The more accounts you have in your business credit reports, the more of these tiers or types of credit become available without the personal guarantee and credit check. Now, a few final notes. You can get this an unlimited amount. There's no limit to the amount you can get. The only limit typically is how much credit you're actually applying for. Okay, you never want to stop building business credit. Just like your consumer credit, you're going to continue to use that credit profile score to get more and more and more money as you continue to go through your life. It's the same thing through your business's lifetime. 90% of what you need to get money for, business credit will buy. And this is good because we can use business credit to pay for all the stuff that it can pay for. Then we have a very small slither that business credit won't pay for, like payroll, that we can use loans and credit lines and things like that for. So we need to get way less funding using business credit because business credit can cover so much of what we need to buy. So if we can help you along the way, let us know. This is what we do at Credit Suite. We improve your fundability. We have a fundability score, for example. The fundability score shows your likelihood of getting approved. You can see what's wrong, what to fix to be able to increase your probability of stopping the denials and getting more approvals. We help you through a step-by-step business credit builder that integrates directly with the reporting agencies. It shows you all the accounts you can get right now. So as your business credit grows, it shows you more and more and more accounts you're able to get without personal guarantees and credit check. And we also deal with over 1,000 lenders in every kind of financing. So we can also help you with all aspects of financing. Our Fundability software identifies the funding you can get, the funding you can't get, and tells you exactly what to fix to unlock that funding to be able to help you get even more funding options as well. So let us know if you'd like to talk more about working with our coaches, our business finance specialists, and our Fundability software as well. So Jake, that is it for me. I left plenty of time as you had requested for questions. You know, I love this, so I could talk for hours and hours and hours about it. But I wanted to make sure that I'm available to help you answer the questions and everybody that's cool here attending. Nobody that's not cool. Do not read questions of non-cool people. If there are cool people here answering questions, I want to answer.
They've all been pre-screened, so we'll make sure only the cool people get to ask questions. And call me crazy, but something tells me you could continue to talk about that for a couple more hours if we needed you to, right?
Yeah, I do know a thing or two about it. It's been 12 years since I wrote the best-selling book of all time on business credit, amongst some other accolades. So I've learned a couple things through the decades. Yes.
That's awesome. That's awesome. Well, thank you so much for that. Guys, if you do have questions, pop them in the chat there. I've got several questions here. The first one I want to say is I work with these day in, day out when we're creating entities for people, and then it goes on every business tax return we do. But I never knew how to sound it out. The NIAX code. We always just call it that code that, you know, you forget the acronym there. So I thought that was pretty interesting just to learn that.
I always called it NAICS, and always.
Yeah, we would just sound it out, but then we just say the code, and then, you know, in our industry, we know what that means, but we never gave it an actual name there. So that was awesome.
Yeah, good. Yeah, my business partner, Megan, she's the brains of the operation. I'm not the looks. I don't even know why I'm here, to be quite honest with you. But she's the brains of operation. She's the one that actually introduced me to the actual correct pronunciation. I can't even say pronunciation, so I'm going to stop right now.
There you go. That's great. Well, I have a bunch of questions, but we do have some for all of you guys who joined us. Thank you so much. Type those questions in the chat. We'll make sure we got plenty of time here for Ty to answer them. We do have one from your good friend, Adam Taylor. There, Ty. He said he's never checked his business credit, but he has Amex cards for each of his businesses and puts everything on those. Should he get retail type cards as well?
It's a great question. And by the way, for a lot of established businesses, this is exactly what we see. There's a couple things to keep in mind. When you're building business credit, you're getting Amex cards without a guaranteeing credit check. Usually, if you haven't built business credit, then you are providing a personal guarantee credit check. A lot of people ask me, they say, hey, how do I know that? I'm like, well, if you provided your social, then you provided a personal guarantee credit check, and almost guaranteed you did. So the difference is that if you're building Amex cards without the personal guarantee credit check by business credit, then you get around that. You're still able to get those high limit accounts. But business credit building is interesting because what helps you build business credit and become more established to make it easier to get the money you want is to have a lot of accounts on your business credit reports. So Adam, like us, I'm sure, has no limit Amex cards. So it's easy to use that no limit Amex card every single time I buy something. But here's the things to keep in mind, Adam. First of all, does that report to a business credit reporting agency or not? It's why you want to pull your business credit. Think about it. You're doing all this spending on a credit card that you don't even know if your business is getting credit for. And a lot of Amex cards don't report to the business credit reporting agencies. So we want to make sure that we're building business credit and we're using credit that reports there. Otherwise, we don't get credit. Lenders and credit issuers never see that we're using that money. Because we know that business credit is built and more beneficial the more accounts we have on there, then what you should be doing is the things that you're most commonly buying, then go ahead and get a retail credit for that. So if I'm always at Best Buy, and this is a true example for us, we buy MacBook Pros for every single new team member here at Credit Suite. Well, MacBook is, I don't know, depending on which one we're buying, $1,000 to $2,000 for every one of those computers. So we've got a credit line with Apple because those credit lines help us build business credit. And we have one at Best Buy for exactly the same reason. So we might have a credit line at Best Buy because we buy all of these Apple laptops, right? We buy all the AirBook. I know that's not what Apple wants me to call them, so I won't. But we buy all these MacBook Pros. And so because we spend so much, we want them to see that we're using that credit line to buy all this kind of stuff. So that's just one example. Wherever you're spending a lot of money, get a credit card there too and use that. Now you're showing one credit line, another credit line being used, another. And now what happens is lenders and credit issuers see two things. A lot of people are giving you approvals and you're using the credit you're given. And when those two things happen, when they see that you're getting a lot of approvals and using it, then you become a target. Credit issuers and lenders,
right? Like,
yeah, they want to come after you. And that's where you flip the script. And then lenders start chasing you. This is where we get pre-screened offers. And they're saying, please apply, take my card, take my line, take my loan. Because again, we become the type of applicant that they want to see.
That's awesome. So that's kind of into my question was, is there like a recommended, you were talking about thinking outside of the box with like these kind of retail cards and fleet cards of stuff I personally would have never thought about. Is there like a recommended mix of that stuff? Like this percentage retail, this percentage loans, or
there really isn't. Now, if we look at consumer credit, there is consumer credit.
There's an algorithm where if you go over this and, then you get a personal loan, it'll tank everything. Business credit doesn't have that.
It's really interesting. So when we look at consumer credit, I won't go through all five, but there's 5 things that determine the FICO score, the consumer FICO. One of them is the credit mix. They want you to have 3 credit cards, 1 to 2 mortgages, and 1 to 2 other installment loans as examples. There is no such thing in the business world. As a matter of fact, your Business credit scores are primarily driven by one thing. So most of us have heard of the Paydex score from DNB. The Paydex score is only based on one factor, only one, how you pay your bills. They look at the average of how you pay your bills, and that's your score. So what we really want to focus on in the business world isn't the credit mix. We just want to get as many accounts on our reports as we can that report to the business credit reporting agencies. Then we want to pay them on time or early. If we just do those two things, add as many accounts and use them to the reports, pay them on time or early, those two things will always give us exceptional scores.
Perfect. We got some other questions coming in here too. So Wayne asked, what's the best business credit card that reports to start with?
Well, it depends. It's kind of a loaded question, and here's why. If you're going to use a starter, let's say you don't have any business credit reports now. First of all, you have to determine, are you willing to provide a personal guarantee, or are you not willing to provide a personal guarantee? If you are willing to provide a personal guarantee, I would go through the credit line hybrid program, because the credit line hybrid program, you're going to get 5 or more major credit cards, many of which report to the business credit reporting agencies. And the reason that's important is with that program, you get about 5 times more money than you would get on your own. The other thing to Wayne's question is that it really depends on his own unique situation and what's important to him. So what I mean by that is that some credit cards, like I am a Marriott guy and I'm an American Airlines guy. That is why, don't hold it against me. Okay. Which, by the way, this is why ADHD people shouldn't do this stuff. I saw the great TikTok today where these guys were on a Spirit plane, and then you heard like the ignition trying to start, and it was funny. It was funny.
Anyway, trying to start the actual plane. That's
trying
not
to start the actual plane, and these guys are in the seats going, "What's that?" But anyway, so I'm American Airlines and Marriott. So I am going to go use a major credit card that will give me points in one of those 2 areas, because for business and even personal trips, then my travel becomes free. That is what's important to me, are points back on airlines and hotels, because travel is important to me. So we've got to really look at that. What is his unique scenario to figure out what their credit card is? What's important for him? Because the points and the rewards are different for every one of those cards as well. If I'm going to recommend the best starter vendor, I'm a big fan of Granger, because Granger gives a $2,500 credit line with a business license, and they're a perfect starter vendor account. And that $2,500 credit line helps me get my future approvals about $5K. So just Granger helps me get $5,000 plus approvals a month into business credit building. If I have good personal credit and I'm okay to provide a personal guarantee, for me personally, I would go with credit line hybrid. It's what I did. Okay, I practiced what I preached when I got my credit cards. Even the one, I have one in my wallet here. One in my wallet, and this is it. And this is my American Express. This is one of the very first credit cards I got from the credit line hybrid program. It's still the main credit card that's in my wallet, because again, it gives me the points back on what I care about the most. So hopefully that it's tough, because I can't tell Wayne what's best for him, but there's some guiding lights that can help him choose the right card.
That's great. Wayne did have a follow-up question. He said, when establishing a retail credit line, can a person confirm that that company reports properly?
Yeah, just ask them. Now, don't get me wrong, like, a little bit of if I tried to do some self-promotion, that's one of the things that, for example, our Fundability software does, is it tells you every account that's out there, and then it
that actually reports to the credit bureau.
Yeah. So if you look at this, and this is why business credit building is a little hard, and I won't spend more than a couple minutes here, but here's our Fundability system, for example, where it shows your likelihood of getting funding and it helps you identify and fix these issues. But if we look at business credit building, for example, then all these business credit accounts that we can look at, they all report to different reporting agencies. Some don't report anywhere. So in our system, it's really simple for somebody to click and see that Ford reports to D&B, or to see that BP reports to D&B, Equifax, and Experian, et cetera. So if you're using and working with us, it's very easy to do. You're just navigating through this and getting all the credits you want to get. If you're not, then the key there is to ask the credit issuer, which reporting agency do you actually report to? Then you have to be super careful to make sure you are not providing a credit check or a guarantee. It used to be, Jake, that I could just tell people never provide your social. Then back about 4 years ago, the government said it's now mandatory to supply your social for traffic, or so they can identify you, to basically prevent money laundering. So they do have to get your social now, any bank credit, to verify who you are, making sure that you are a legitimate person and it's not money laundering. But you need to make sure they don't do a credit check or a guarantee, you have to tell them upfront, I'm not authorizing that. Then they'll make the decision based on your business credit quality, not your personal credit.
That's interesting you say that, not to get too off on a tangent because we do have some more questions, but I realized that when setting up our corporate credit cards that we have set up through Bank of America, when we're going to add a new card for a new employee, we have to put in their social, and they're always like, hey, wait a minute, like I'm not signing up for a personal credit card with the company, or like that's what they request. That's how that works. And that would probably be because of what you just said there, right?
Yeah, it is. It's a requirement as of 2018 now from the IRS. And by the way, we're the last country that did this. Like all the major countries out there already have these checks in place to prevent the kind of stuff that they're trying to prevent in the United States. We are way behind the 8 ball and even adapting those strategies. So don't take it too hard on the government. I mean, this is in place in pretty much every country out there to make sure that the person who owns the business like is a real person, not
totally makes sense.
All kinds of havoc.
All right, let's go with some more questions. So Velvet asked us, if you want to be completely no PG, which is personal guarantee, how many trade lines do we need before we can get access to credit cards in our business name that can be used anywhere in business loans?
So I'm going to answer this 2 ways. So we call this payment experiences, and the payment experience is the reporting of an account to a reporting agency. So we just looked at Fundability, for example, and we looked at, I don't know which account, BP. BP reported to DNB, Equifax, and Experian. That would give me 3 payment experiences. We also came, and I think the first account that I pulled up was Ford. Ford only reports to DNB. That would give me 1 payment experience. So we want a total of 5 payment experiences to move on to retail credit. So we need about 5 payment experiences to move on to retail credit. We need about 8 payment experiences to move on to fuel credit cards. And then we need about 14 to get universal credit, Visa cards, MasterCards, Amex I can use anywhere, and auto financing. Now, keep in mind, these change all the time, right? That's like why our software exists, to be able to figure that out. But as we are right now, those are the thresholds to move to that next tier in the process.
That's great. So Velvet had a follow-up question too. He said, is there a penalty for utilization like there is on personal credit? That's kind of what I was asking too, like that whole algorithm, you know? So that's part of it. And then he said, for example, in consumer credit, if you go above 30% utilization, you're penalized. Does that exist in the business world?
Okay, so a couple things. It is a myth that if you're over 30% with consumer credit, you're penalized. The reality of consumer credit FICO is that you're penalized with any balance. So any balance actually legitimately can hurt your score, and the higher the balance can. And I want to address that because a lot of people think that under 30 you're safe. That's just not true. If you're at 25% utilization, you are hurting your consumer FICO. Don't believe me? Pay that off. You'll see your scores go up. It absolutely
go right up, right?
I want to clarify that because utilization and payment history is 35% of FICO. Utilization is 30. So what FICO is saying is that keeping your utilization low is almost equally as important as paying your bills. I mean, that's just the math of FICO, right? Now, we look at the business world. Business credit scores are primarily driven based on how you pay your bills. Experian does have one score that kind of takes into account the balances, your utilization. But what's interesting is in the business world, if you look at your business credit reports, your business credit reports don't even tell you the limit of the credit you have. They tell you the recent amount of money that you have used. So I think it's an important lesson here because from business lending standpoint, lenders care more that you are getting credit and using the credit regularly than they care about what your limits are. So the short answer to that is not. Utilization just doesn't really matter in the business world, but it still is best practices to keep your limits as low as possible and relate to your limits, or your balances as low as possible in relation to your limits, but it won't hurt you like we see in the consumer.
No direct result, but obviously don't go overextend yourself for no reason if possible.
Right, because then that could be a problem, right? If lenders start to see that trend from the lender reports, that will be an issue. But they're more concerned with your payment history. They're more concerned with, are you paying beyond terms, on time, early, how far beyond terms, how early? That's what's most important. Utilization is just not really a factor.
Great. So Charles says he has a startup business. He ended up getting an SBA loan, personally guaranteed by his wife and himself, and a lien on his home. When applying for a vendor line of credit, they asked if he had a DUNS number. When logging in to see his score on Duns, he just sees the lean and a high risk score. What is the best way to positively impact that score?
So your Paydex score with D&B is what you're talking about. The Paydex score with D&B is based only on one factor, which is payment history. So the key there is to get accounts intentionally that report to Dun and Bradstreet, pay them on time or early, and that will correct that if he has a score. D&B won't even give you a score unless you have 3 accounts reported on there. So he may find that he doesn't even have a score. And if that's what he finds, it's because you don't have 3 accounts reported. So you want to get at least 3 or more accounts that report to D&B that'll give you a score. And then if you pay them on time or early, that will give you a positive score. And by the way, Jake, this is a great question. And it's why you want to continue to build business credit. Because when you continue to build business credit and add more and more and more accounts to that report, even if you forget, you mess up, you go late, you have so many positive to offset the negative, it really has minimal impact on your score.
Got it. This is great. So Charles had a follow-up question. He said he also has a Marriott Amex that is personally guaranteed. How does he make sure that reports for business credit?
Well, you could do 2 things. First of all, call Amex and ask them where it reports to. I do this all the time. And the second thing, before I lose track of where I am, is pull your business credit reports. You can go to creditsuite.com/monitoring or go to NAV. I like NAV because they give you Equifax and Experian. Right now, you have to go to D&B also to get your report because NAV doesn't have them. They probably will in January. But you want to look at each of your reports, Equifax, Experian, and D&B, and you can see if that account's on there or not. Now, be aware that we don't see the name of the credit issuer. You won't see Marriott. You won't see Amex. Business credit reports tell you the category of the type of credit, not the credit issuer, but you would be able to see that account on there. It would look familiar to you. So I would pull the business credit reports and I would call the credit card company. Now, in the future, I always do this before I apply. I got a PNC application the other day, went through it, looked great, called him up, said, hey, where do you report? I loved it. The guy said, we pull consumer TransUnion, consumer Experian. We report to like consumer Experian. And I was like, have a nice day. See ya. So I don't even apply for credit cards now. I ask that question before I apply. If the person doesn't really sound knowledgeable, I hang up and ask 3 people to get the right answer. But then I don't even apply for a card now if it doesn't report to a business reporting agency.
Nice. So Wayne had a follow-up question. He said, he wants to know your contact information. So to get a hold of you and your team, is that creditsuite.com? Is that the best way?
They can go to creditsuite.com. I'll pull the slide up really quick and I'll share this maybe even while we're doing the Q&A because that'll have all my contact info right there. And then they can always just go to our main website, which is creditsuite.com, and creditsuite.com then has all that information as well.
Beautiful. And then Wayne also asked, he said, who provides their personal social security number in a giant corporation made up of multiple owners?
Well, so this is the interesting thing is that typically what they're going to do is they're going to ask for, in a lot of cases, verification of anybody that owns more than 20% of the entity. Any shareholder that owns in a private company like that, more than 20% is what they're is typically what they're going to ask for just to verify the ownership of the business. But if you look at a Michael Dell of the world, the reason that he doesn't personally guarantee his business debt is that if you look at Dell's credit report, there's 200 accounts on there. So Dell has established enough credit where it can stand on its own. That's how they all get around it. And not to get off like on a side note here, but if you ever read Sam Walton's book about how he founded Walmart, he talks about the same thing. When Sam founded Walmart, he talks in his book about how he would sit there and the person would go back in the back room and he knew they were pulling his D&B report and they would come back in and he built his business credit and they gave him the credit lines that he needed to actually start Walmart. Now, if you look at today, and this is a little bit off topic, but if you look at today, 80% of what Walmart buys, they use business credit to buy. So that means if you walk into Walmart and count 10 items on the shelf, 8 of those 10, they use business credit to buy. Then they put the item on the shelf, then you give Walmart money and they take your money and pay off the credit. Business credit has more value into Walmart than all shareholder value in the company combined. And it's also why they save their cash and then use it for store expansion. It's why they have 10,000 locations around the world. So a little side note, but I always like interesting historical facts like that.
Yeah, that's great. And so that kind of brings to my question. And I want to say too, we got a few more minutes booked for the event here. So let's get as much out of Ty as we can. If anybody else has any questions, pop them in the chat there. We'll be happy to answer those. That kind of leads to one of my questions earlier was like, we see it all the time. I'm sure it's not very uncommon for new business owners to utilize a mix of like their business, personal credit. They're kind of like when you're bootstrapping, when you're starting a business, it's not recommended, but sometimes you'll sort of take funding from whatever sources it's able to come from, right? So from there, are business owners able to refinance from the personal credit cards, all those other maybe not recommended sources of credit, to actual business credit at a later date?
You just like anybody that offers 0% rates, you can definitely, a lot of the credit cards will allow you to transfer money from one card to the other. But once you supply a personal guarantee for a credit card, you do not go back. I could supply a personal guarantee for an Amex. Then I could put 100 accounts on my business credit reports. My personal business credit reports could be perfect. Amex would still never remove the PG. I would have to shut down that Amex and get one without a PG. So once you provide a personal guarantee, yeah, you're always in. You never get out. But you can balance transfer, and that's what a lot of people do to close down the personal accounts or stop using them for that purpose and then shift the money over and start using the business credit cards. And by the way, if you're doing this right, you should be building business credit from the minute you start your business and using those credit cards to fund the business. It would solve all these problems and is 100% practical and probable to be able to do that. It's way easier than getting in this financial checkmate you get into by using personal credit to try to launch the business.
Yeah, kind of a follow-up to there. We see it often with clients where it seems like it's a lot easier to get credit when you don't need it, when things are going well, right? To where if you do, unfortunately, get to that like financial checkmate point, it's a lot harder to get approved for things, right?
Sure. And that's what you're saying is what a typical entrepreneur goes through. Hey, Jake, I'm going to launch a new business. I think it's going to cost me 10 grand. I think I'm going to make money in 90 days. Man, I'm 7 months into this thing. I have not made a dime and I've spent $27,000. Like, we all laugh at this because we lived this journey. It takes way longer to make the money and way more money than we think it will be to launch. And then what happens is I think I'm just going to use my personal credit, but now I maxed out one of my cards. Now I'm on my second. Now I'm on my third. And then I'm like, oh, crap. Like, oh, crap, handle, as my partner calls it. Like, I'm in deep trouble. Well, now I'm screwed because I think it was Wayne that pointed out earlier that 30% of your FICO is utilization. So now my credit score is in the toilet because I'm overutilized. Then a lender, a business lender that would have easily given me a loan, now looks at it and says, whoa, we don't want to help you. You're already maxed out. It looks like you're in trouble. It looks like you're sinking. And then everybody pulls back. And that fundamentally is financial checkmate. It's the problem most go through. Now, if you look at this from another side, I start my business today. I start building business credit today. A month in, I'm already getting credit.
Did you freeze up on us there, Ty? Is that just me or? Think you might have froze up on us. Not sure if anyone else can hear you, Ty, but you did pause on my end. It looks like I'm still moving. It looks like it's still registering my microphone here. So I'm pretty positive that's on your end. We can wait just a second, see if Ty comes back here. Velvet, thanks. You can hear me, but Ty is frozen. Yeah, I think he froze up there. We actually lost him. So that wasn't intended, but it actually brings us right to the end of our event. So thank you so much, you guys, for joining. Thank you, Ty. I would thank him if he didn't get frozen and drop off there. I'm not exactly sure what happened, but technical difficulties are a part of it. Thank you guys so much for joining us today. Hopefully you got some value out of this. If you need anything from me and my team, of course, go to our website. Per usual is actionaccountingusa.com. If you need anything from Ty and his team, go to creditsuite.com. And they would love to help you out. I can stick around for just another minute or two. If anybody has any tax related questions or tax planning stuff, we always love talking about that. If not, you guys are free to go on about your day. We really appreciate Ty. Sucks he fell off there. We can't thank him and tell him how great he was. He's texting me now. He said, no, you just lost internet. So we figured that's what happened. But thank you guys so much for joining us. Hope you enjoyed it, got some value out of it. Jake Alexander from Action Accounting USA, and we will talk to you all soon. Thank you guys. Have a great rest of your day.